Thanks a lot for joining this webinar. So while we're still gathering, I just want to briefly introduce what we're going to talk about. So our topic today is Payment Trends 2026, how intelligent orchestration will power the next wave of global payments. So we will cover topics like AI-powered payment orchestration, embedded payments and platformization, open banking and open finance, and new rails and emerging geographies. So our panelists today are Neva Jones, key fintech opinion leader, and Andrew Riabchuk. He's the founder and CTO of Akurateco, and we will also introduce Akurateco. And after that, we will have a Q&A session. And you're very welcome to write your questions. And so let's. I'm giving the stage to you, Neva and Andrew. Thanks a lot again for joining.
And thank you so much, Catherine. It's a pleasure to be here, and welcome everyone to Orchestrating Tomorrow. This is a special episode that will be exploring the technologies and market forces reshaping global payments in 2026. So I'm Neva Jones, and I'm joined today by Andrew Riabchuk, founder at Akurateco, a leading payment orchestration platform helping merchants and fintechs navigate the most complex payment landscapes that we have today. So Andrew, I'm really pleased to have you here. You actually bring real clarity to the architectural and strategic decision that separate resilient payment infrastructures from the rest. So today, what Andrew and I are going to do is cut through the hype, the myth, and the headlines and get to the heart of what's really changing in global payments. And we'll be looking at some critical things, including AI, embedded payments, open banking, and of course, emerging geographies. Throughout, we'll be asking, why does this matter to merchants, platforms, and indeed payment orchestration platforms like Akurateco? Still, and around the end of the webinar, we will have a live Q&A session where you get the opportunity to ask us what really is on your mind. So, Andrew, it's totally wonderful to have you. But before we dive into the questions, please do tell your audience a bit about yourself and why payment orchestration has now moved from a nice to have to existential.
Okay. Hello, everyone. I'm Andrew Riabchuk, as been said before, founder and CTO of Akurateco, a payment orchestration platform for payment service providers, acquiring banks, and enterprise-level merchants. And indeed, the payment orchestration is quite a hot topic now, and it's developing and growing quite fast. And like 5-6 years ago, it was just very, very new technology, and only very few of companies were researching and trying to use that technology to, let's say, to streamline their payments, to increase their growth, and to speed up implementation of new features. Nowadays, it's become wider and becomes more, let's say, more often used by companies. But why? It's just because that the payment technology and the the services and products in the payment landscape are quite complex and and hard to implement, and it needs significant resources for development, for fine tuning, for start, and even for test. And sometimes, not sometimes, but more and more often, companies just they don't have resources for that. They don't have time. They want to try something. They want to implement some new payment methods, or they want to use to expand new geo, or to start working with some specific vertical of the business. And this needs, let's say, some specific payment methods and technology, but they don't have time for that. So using payment orchestration for them is kind of the shortcut to concentrate their efforts on sales, marketing, business development, and outsource this technology to companies which really have expertise and people and everything in place. And verticalization of businesses. So, creating the specific niche PSPs, or working with some specific products related to credits or related to payments also dictate that, I mean, you need substantial technology for that. So payment orchestration is created to help all mentioned questions, and it's just beginning of the path, I believe.
Absolutely, just the beginning. And as with everything in payments, there is a lot of hype that's being thrown about. I'm sure you agree, Andrew. And what I've seen is the term AI-powered orchestration gets thrown about in boardrooms and in fintech pitches. But what is it really? Because we've had machine learning in payments for years for fraud detection purposes, risk scoring, and all other sorts of operational use cases. So when we talk about orchestration in 2026, what's generally different from the tools that merchants already use? And also, what's the hype?
Okay. Yes, AI certainly is on hype now. So, and especially since a couple of years when the first LLM models became public, so everyone are currently trying to use AI or to implement AI in their day-to-day routines and their functionality and in platforms. Also, it's not even the AI. It's let's say it's a complex of methods called AI. But you're absolutely right that the machine learning, which is a very important part used from payment service providers, so also for payment orchestrators, is in use since years. So having let's say big data sets, having a lot of information, of course, gives you ability to analyze this information, and based on this analysis, find patterns and use those patterns to either increase the conversion rate or to identify fraud or to, let's say, try to minimize your cost or do everything all together. And of course, it's let's say, but it's machine learning. It's not what nowadays people are called by the AI, because AI is mostly related to LLMs. Uh, and LLMs also is in use for payment orchestrators, and it's actually used for the support, used for the documentation, to the co-pilots embedded in the platform. But uh, I mean, people nowadays called by AIs are called many different things, and there is no, it's not a silver bullet which helps you, let's say, to optimize all, let's say, all together just immediately. It's just the proper work what should be done, and those number of products based on the AI and based on the some specific segments of businesses like anti-fraud patterns or I mean, co-pilots helps you, let's say, to significantly increase level of your support. Of course, could be used and should be used in the payment orchestration. But the conclusion is that the payment orchestration having big data sets using AI methods, particularly ML, since years, and it's just increasing. And from my perspective, it's even more important than LLMs. But LLMs could provide better UX, faster analysis of the information, better support. And in combination of that, of course, it's useful, but again, it's not a silver bullet.
Absolutely, and I know the importance of the data for merchants, and there is a lot of hype. And if I'm a merchant listening to this, you know, following on from this, we need to understand what the real return on investment is. So cost savings are potentially great, but what I'd like to know is what moves the needle for my business. Are merchants actually seeing real return on investment from AI orchestration? Because we're talking about things that matter to merchants, such as approval rates, fraud prevention, customer conversion. So, what does that actually like in terms of return of investment?
I would like to say that first, in general, not from AI orchestration, but just from orchestration. The merchant and any client of the orchestrator normally takes three things. First, it's, and which is mostly discussed, it's increase of the acceptance rate. So using the right paths, so choosing the right financial partner, or the bank, or number of financial partners on the fly, helps you to increase acceptance rate, also to decrease time of the transaction. This is first. Second, decrease costs. Decrease costs means not only finding the right financial partner with a lower fee, but also distribute is the smart way. Distribute is a way when, let's say, this particular transaction would find the best routing path plus lower fees. And in that case, AI could be used. But again, as I said earlier, so it's mostly from ML perspective. So it's not, it could not be totally outsourced for an AI engine, because let's say the price of the mistake is too high just to fully outsource it for the AI agent. And the third, of course, let's say for the merchant or for any other customer using a orchestration, the AI orchestration, is useful because of the speed of implementation of new features. And by new features, it could be new payment methods, could be some anti-fraud tools, some wallets, some stable coins, crypto processings, and many other aspects. So the speed of implementation of that new feature with orchestration is significantly faster than if you would do it in house. And of course, it will not need for you substantial investments, because let's say you can try, and if it doesn't work, let's say just skip that. It will not be so harmful for your business, for your day-to-day routines. So conclusion is that everyone are talking about the higher approval rates, but higher approval rates, in fact, if you have stable partners, it's just around 3, 4, 5%, not more. But deducting reduction of costs could be significantly higher. So of course, it depends on the scheme where the merchant works, depends of the financial partners, but it could be significantly higher. So you can reduce your costs by 20-25% if you do it the smart way. And for that, AI could be also used as well. Yeah, so it's in very few words how I see it.
And I absolutely agree. So what I hear from you is really we're moving beyond cost optimization, just cost optimization. It's there are really many levers to tweak and choosing the best routing, choosing the best partners, looking at the fraud that comes by having more data, and of course the expertise that orchestration essentially offers, which in my mind looks like, by doing this, and you mentioned not having things in-house and doing it all yourself, to having an extension of your own payments team with additional expertise to optimize the whole operation.
Yes, correct. Yeah. Just to add a few words. So the payment orchestrator is a set of tools, and it's important not only to use those tools, but know how to do it the most effective way, the best manner. So
Absolutely. And it will vary by geography, of course, and service providers, and what's available, and the best corridors. Now let's move on to something that's really important to merchants, and especially in this day and age where we're increasingly digital, where fraudsters are becoming increasingly sophisticated. Fraud and indeed cybersecurity are top of mind for merchants. So we've talked briefly about fraud detection earlier, but with orchestration, you're actually seeing data across multiple payment pathways, because essentially you've got this breadth of visibility. So why does aggregating that data matter so much? And why can't a single PSP, for example, deliver the same level of fraud intelligence than orchestration actually brings?
Yeah, you're absolutely right. The answer number one is just because of the amount of data. So the orchestrator normally works with a with many different verticals of businesses of their merchants. And in our case, like Akurateco, as we work mostly with the payment service providers, it's even larger scale. So we have PSPs which work with specific vertical of businesses, which have merchants. So having that data helps you to identify those fraud patterns, which help you which could, let's say, help the merchant to do it the most efficient way, comparing with a single PSP specialized for some specific vertical of the business. This is first. Second, the payment orchestrator normally has embedded in anti-fraud, which based on the on rules or based on velocities, not so much important. And they also, as a connectivity bus, a payment orchestrator can be integrated to third-party provider, the anti-fraud providers, which has specific expertise in particular vertical of the business, or in particular geo, or both. And combination of those two could really be very helpful for the merchant. And again, it's a matter of speed of implementation of that. So if the orchestrator doesn't have this particular anti-fraud provider, it could be implemented. But we can start with rules-based anti-fraud, which cover, let's say, 80% of cases, and could find can help to eliminate majority of fraud for the merchant. So it's kind of like Lego, where you can find very tailored solution with the help of the concept of the orchestrator, where the orchestrator is a central hub connectivity box, which helps you to be connected to the desired service, and for a reasonable price. In addition to that, the cybersecurity is also important thing, because I mean, all those certifications like PCI DSS and the other certification depends on the geos and depends on the verticals you're working with, requires quite a lot of efforts to pass through. And uh, so not every even the big size merchants can afford to pass that certification. And the payment orchestrators are normally they have all those certifications, so like PCI DSS or ISO or SOC 2, SOC 3 if we talk about North American market. So, and of course, it helps merchant to work with more demanding financial partners, which requires you to have those certification. And of course, to outsource all potential headaches related to cybersecurity to really professionals who is doing that and taking care about that on day-to-day basis. So yeah, so the conclusion is, so it's again about flexibility and about outsourcing of more specific things which are related to people which have more expertise and more data to I mean to fight with a fraud, or to meet criteria of cybersecurity faster, better, and cheaper.
And absolutely, and in fact, you've taken the words out of my mouth, because people who know me know that I'm particularly interested in compliance with standards or with regulations. You mentioned various ones in there, and we know that merchants can actually care about chargebacks or conversion, and they will have a different risk appetite. But increasingly in our world, compliance, especially across borders, if we're talking about orchestration, becomes increasingly complex. So not only do we have regulations such as, for example, data privacy regulation or payments regulation, but we have standards such as 3D Secure and PCI DSS, which everyone in card payments need to comply with. And what I heard you say is mention the flexibility that orchestration offers merchants, specifically those that actually navigate across borders. So flexible framework really resonated with me. So can you give us the key elements of that so that merchants can see what the value is of essentially being confident that they can adapt at scale to all those regulatory requirements?
Yeah. Of course, nowadays the requirements from the KYC, KYB side is an expectation are quite high. So let's take as an example payment service provider. Payment service provider need to board merchants, and if payment service provider work cross border, their requirements are quite high. So they have to work with third party companies which, let's say, perform those checks, which have significant databases to check both businesses and customers. But it's important for them to do it the way when it's fast and it doesn't, let's say, take too much time for merchant, because merchant always have a choice, let's say, within this PSP or with the other PSP. So it needs to be done fast. It needs to be done properly, but it needs to be done fast. So the payment orchestrator, as a connectivity box, as a connectivity box, as I said earlier, has ability to integrate to those third-party providers, uh, and need also to have the flexible flow. So that flow of integrating of those providers and put this data together. Let's say that we're starting on the payment orchestrator side. So we're collecting some basic information. Then we pass that information to the KYC provider. We receive some response. And by that response, we're creating automatically the merchant account. And this merchant account is already integrated within financial partner number one, financial partner number two, financial partner number three. So this works. This is example for PSP number one. For PSP number two, it should be KYC provider, different KYC provider, different financial partner, but still it should be. It should be possible to create that flow, that specific flow. So the goal for the payment orchestrator is to give that constructor and to give ability within reasonable time frame to be integrated to those third parties. Because without third parties, it's not possible. It would not be even compliant by the regulator or by needs of the specific vertical of the business. Also, you mentioned about the chargebacks and about handling of those information. Also on the market there are major players, Visa and Mastercard, which are offering quite professional services, which helps you to combat with chargebacks and to process chargeback alerts or to the proper dispute management system and so on and so forth. So the payment orchestrator task is the same, be able to implement those alerts and combine it with the transaction. So the transaction is coming, so we immediately see the chargeback alert for that. So we do automatic refund. So we avoid those chargebacks are coming to schemes and impact on your MID on the terminals, which could bring you to close that terminal. So it's again from conclusion that it should be connectivity box should be available to integrate with third parties, but it should be done fast and convenient way. So those flows, and if we talk about compliance, if we talk about the chargebacks, always tailored. So there is no any let's say once you set and use rule. No. So it should be flexible. It should be convenient, and it should be possible to implement within with your current transaction flow.
Absolutely. So we've talked a lot about merchants, Andrew, and but orchestration, as far as I can observe in the industry, has actually evolved significantly over the years. So aside from merchant, who is orchestration really serving today? Is it just merchants? So what's different about all this?
Uh, mm, Again, so for instance, it's the end customer is a card holder. Let's say if you talk about cards, but after the card holder, there are a number of layers. So it's a merchant, it's a PSP, it's a bigger PSP, it's acquirer bank, it's could be like something schemes and so on and so forth. So the orchestration is a layer which could be focused not only on merchants but on PSPs and acquirers, because the PSPs, for instance, they use us as Akurateco as a technical backbone for the whole of their day-to-day businesses and for all their the technical needs, all their functionality. Merchants normally needs orchestrator only for in most of cases for finding the best path of the transaction, for routing, and for maybe also for the billing section if they calculate like some settlements for their partners, agents, and so on and so forth. But it's limited part. The PSP normally use the larger functionality from the orchestrator, including the billing section, the routing, the failover management, this external API, uh, pay by link, and many other functionality which normally orchestrator should have. Acquires the same time, uh, mostly using functionality, some part of functionality, and for them it's very important that the orchestrator is available to provide this functionality by the API, so on called the embedded payments. So because they normally already have the infrastructure, and it's quite complex infrastructure, which consists of multiple parts. So it's a processing software, it's its core banking systems or any other systems, and it's heavily regulated, and the interaction between them is heavily regulated. So for banks and for platforms like marketplaces, not only banks, for them it's important to use some specific part of functionality, like for instance merchant management system only, or only routing and cascading engine, or billing section and ability to create merchants and MIDs and terminals, register them by the API. So part of that. And so if orchestrator has this ability, of course, it gives him advantage comparing to others. So because embedded payments, it's mostly used by bigger players, which already have infrastructure.
Oh, absolutely. So beyond merchants, looking at those that essentially aggregate and provide services such as marketplaces, super apps, SaaS platforms, and of course, bank evolving as product providers with embedded payments. This is the way our industry is moving. What I'd like now to do, Andrew, is to talk about something that obviously makes the news quite regularly, and that's open banking and open finance. And there are diverging opinions on this. So, and what I'd like to explore is whether open banking has actually delivered, because it's been around for several years now, particularly in Europe since 2018. So there's been a lot of investment and a lot of expectation. But do you think that it has actually delivered? And what's the reality of open banking for merchants and platforms, indeed?
Yeah. Uh, the open banking is really hot topic, and in on the paper, on the first glance, it looks like a beautiful system which should replace the older legacy payment systems, including schemes, including card schemes. But indeed, in reality, nevertheless, like you absolutely correct mentioned, that it's since 7 or 8 years already on the market. There are very few examples of a successful implementation of that. And let's take Europe. Yeah, let's take systems based on the open banking, which works since years, and or it's even before it was not even called the open banking, but it's account to account transfers, like Ideal. So in Netherlands, for instance, Ideal is covering majority of the market. It's more than 90% of payments are done within ideal. Does it mean that it's the best implementation of open banking? No, because it's older, and there are newer systems like BLIK in Poland, which works better and faster. And in regards to implementation, it's it looks more modern, more recent. But does it mean that it could be multiplied and could be used by everyone in Europe? Uh, in theory, yes, but in practice, not. The initiative of this bureau is, supposed to create this infrastructure and to create that scheme. But of course, we'll see, because it's just, it's beginning of the path. And unfortunately, in Europe, sometimes good initiatives are not moving as fast as we want. And there are companies like Trustly or Tink, owned by Visa, which could be a good example of the open banking really working. But I believe that the future of open banking is bright, but it's moving a bit slower than we would like to have it.
Yeah, absolutely, and the beauty, I think, of orchestration is whenever anyone is ready in any geography, then an orchestration platform can actually plug in to those other rails for A2A payments. And we've seen that not necessarily just open banking, but A2A payment with the success of PIX in Brazil and indeed UPI in India, who are very, very advanced in that matter. But what's most interesting for me in relation to open banking is not so much the concept of open banking itself, but the data that it delivers. And data is, of course, very, very important to any ecosystem players. And I heard you mention earlier on that there are data-driven opportunities with open banking. So it's not just about moving money faster. So what's the real competitive advantage for merchants who can leverage that data? Because I'm sure that can deliver better payment outcomes if you have more data.
Well, of course, the data is the king, and let's say more we see of elaboration and development of the payment landscape, that more we understand the data is more important than even the volume what you currently have. The amount of data what you have more important than the volume what you have now. And uh, of course, in very simple way, data can bring new revenue streams for merchants. So, and collecting the data and analysis of that data, and of course, uh, it's hard to overestimate the importance of the payment orchestration here, because the payment orchestration, as I said, is connectivity box, and it's when it's more connected, it gets more sources to receive that data and to process that data and to store the data as the most secure and efficient way, and also, let's say, to build analytics over that, or to help, let's say, extract the proper data for the merchant without necessity of create very expensive storages or very expensive infrastructure to work with that. So and in general, as if you talk about open banking, you're absolutely right. It's not about moving money. It's there is, as we know, there are pay ISP and IISP. So that's this payment initiation service provider, account information service provider. So there are plenty of businesses which even, do not do any payment processing, but they rather collect the data and use this like budget software or whatever, and use that data to generate revenue for merchants. And it's not even what normally PSP do. So it's a technicality. It's ability to extract the data, to ability to do something with the data, but it's out of what is payment service provider normally is doing. But merchant, uh, can have such a requirement, and in that perspective, payment orchestrator could be very much help for them.
Oh, absolutely. And once we're talking about that and payments and how some geographies have been really successful in instant or A2A payments. So we have lots of new rails, and I'd like to talk about those as well as emerging geographies. Unfortunately, it's fascinating talking to you. So I'm gonna sort of ask you to answer very concisely because I'm really interested in fragmentation and how we actually manage fragmentation, because the payments landscape is more fragmented than ever. We have new rails, we have regional schemes, we have local methods. You mentioned ideal earlier on that are emerging constantly, and most people actually see that as a problem. But is it really? And how do platforms actually win in that environment?
Uh, because the concept of the payment orchestrator is that it's dedicated to work with any transaction-based flow. At least it should be done like that. So if the PSP normally creates in some isolated infrastructure, it could be vertical, the business could be some geo. So at the beginning, not all of PSPs or majority even of them are not supposed to work with any payment method. And the payment orchestrator is supposed to work globally. So the payment orchestrator should be able to work with any payment method. So and to integrate that payment method quite fast. So the core of the system should be done the way that it should be. It can work with the PIX in Brazil, with UPI in India, with Ideal in Netherlands, with BLIK in Poland, with Interac in Canada, and many other aspects. And the merchant or the PSP should not even, let's say, think about that and be bored how to implement this as that payment method. It should be just done by the payment orchestrator, and the merchant should have all functionality to use that payment method the most efficient way. This is actually the DNA of the orchestrator, to be able to provide super connectivity for all payment methods for the merchant or for the PSP. In regards of new rails, it's very good discussion because you mentioned PIX, and I believe that the PIX together with UPI and maybe with BLIK are the most interesting examples how, let's say, new rails and especially PIX uh, could could develop and could raise and could elaborate in regards of volume with a supersonic speed. So as you might know, the last year the PIX transactions was, I mean, number of PIX process transaction by PIX was higher than the Visa and Mastercard, and this is and especially after the in September last year been launched the PIX optimization. So for recurring transaction on PIX, it gave even it makes even higher spike for those transactions in PIX. So it's just an example of the instant peer-to-peer payment created was I mean created the way when the someone analyzed what has been done within last 10 years in regards of rails like that, and it's all, let's say, all lessons been learned and implemented, and this is the result. Then in 2 years we see tremendous rise of transactions within new rails, and it's could be could be copied with any big country with a higher population, and because it could be done even better than PIX in some in other environments. So I see that the new rails is also just at the beginning of their path, because it's clear what should be done to make it really convenient for the customer, and it's clear what our bottlenecks and problems are on this way. And of course, this growth will be done with together with payment orchestrators, because they are very interesting and serious part of this movement.
Oh, Absolutely, I agree, and we talk about we could talk about the various aspects for hours, but we promised our audience that we would be doing some myth busting. So let's do that just now. So we've covered a lot of ground in the last few questions across all of these trends. So I want to ask you, what is the biggest misconception that you encounter about payment orchestration? You know, what do teams get fundamentally wrong when you talk to them?
Uh, uh, because they consider the payment orchestration is just a routing. This is, I mean, but it's not routing. It's complex of features, and it's just new approach. When you realize that you can do much more if you would use the, because I will always, let's say, let's take an example of a CRM, so the customer related management system. So like 15 years ago, or 20 or 25 years ago, it was or maybe even early, for people it was the question, why I need to buy some software if I can put all my customers in Excel sheet, and let's say with numbers and contact them. Why I need to share my customers, the most valuable asset of myself, with someone who is doing some software. But nowadays, it's not question, yes, for anyone, that it doesn't make sense to use CRM or not, because obviously it's CRM. It's a very complex product with a lot of features, with a lot of capabilities, and if you have good CRM, of course, it helps you to speed up the process of sales, and tremendously. So it's the same for payment orchestration. So it's not only about the routing, it's about the new concept that first of all, you find the right partner, you trust to unified partner, and your partner as orchestrator change your life, change your, let's say, change at least your life related to payments. So I think this is the most biggest misconcept for people. They don't just realize what is payment orchestration.
Absolutely, and the earlier the better, as far as I'm concerned, because it's about essentially working intelligently and being able to grow really at scale and across new geographies, catering for new customer expectations. So and as we said earlier, an extension of the actual payment team, rather than a bolt on after you've thought about your payments architecture. I'd like to leave some times for the Q&A before we do that, before we open it up to the front, I want to bring that back to Akurateco for a moment, because you've been doing this for a while. And before I ask you the next question, I want to ask you, where do you see the areas of growth geographically right now? And what makes emerging markets different from, say, more traditional markets in the West, such as Europe and the United States?
Yeah, the first of all, I would like to remind who we are. So Akurateco is a payment orchestrator specifically focused on servicing payment service providers, both matured ones and the greenfields. Greenfields is obviously they use us as a technical backbone for all their technical activities. The more matured ones, maybe they use some legacy software being built 15 years ago, and they're lacking, let's say, implementation of new payment methods or new functionality. So we could be in help for them. So by the API providing those features. Also, acquiring banks, which I have use us as an embedded finance provider for some of their features, or for let's say, be able to integrate to schemes with newer protocols, because schemes already constantly developing new protocols, which brings easier way how to do what they do within the older protocols, and then the legacy software, which costs a lot of money and a lot of efforts on new rails. I recently had a discussion with the bank this morning, and they are excited, let's say, to use those new protocols, and we help them. Uh, historically, I mean, we are from Europe, and obviously we have the majority of our customers from Europe, from financial centers, where normally EMIs registering their, securing their licenses. Unexpectedly enough, we also have quite a lot of customers from MENA region. So one of our few customers was from Saudi Arabia, and this is very important part of the world for us, and we're growing there. So we have clients all over, you know, all over GCC countries and North Africa as well. But of course, emerging markets are mostly interesting for payment orchestrators because, as we said before, they're very fragmented. So, for instance, for us, next big thing before North America, because North America is by far the most important market, but still, it needs significant time to be prepared and investments as well. So Latin America is very fragmented. Nevertheless, it's mostly card-driven markets. I mean, besides Brazil now with PIX, of course, and it needs a lot of tailored solutions, a lot of integrations, a lot of adjustments. So that's why the payment orchestrator is always in need. Yeah. So like that, in very few words about Akurateco, and again, so Europe and MENA now, Latam tomorrow, and North America is day after tomorrow, I believe.
Wonderful. So that's great to hear, Andrew. So now, as promised at the start of this webinar, we'd like to open this to the floor for a live Q&A session. So have you got any questions coming up so far? Right. So new question. So at what stage should a company start thinking about orchestration, Andrew?
Well, it depends on the company. If we talk about the payment service provider, it's from day one, because the payment service provider, let's say, to work needs three things. It's actually license, financial partners, and software. So the PSP could start from day one with the software, and even securing the license required the software. So we provide that software, and the orchestrator could be used from the day one. If you talk about merchant, of course, it should be some level of volume already. So it's hard to say how many transactions or volume it should be, but I believe if you have already 2-3 PSPs, if you work on multiple geos, if you have requirement for the recurring transactions, or for the payouts, or for split payments, or for something more sophisticated with just pay-ins, you can think that you know, using orchestration could be useful for you.
Cool. So I hope that's answered the question. Have we got any other question from the floor? Right, very important question there, which is actually related to complexity and time to market. So, how long does it take to integrate orchestration within your environment?
Well, if we talk about SaaS, it's a matter of a couple of days. So normally we give 7 working days to provide us the logo and the colors and the SSL certificates and everything what you need. Let's say to really, because we are white label, so we, let's say, to make our SaaS looks exactly like you expect to have. And so it's like 5-7 business days. Also, I would like to say that if you need, we currently have 600 payment integrations on board. You might need to have integration which we don't have. Normally, it takes 2-3 weeks to integrate a new provider. Also, if you need some specific development, we also can do it for you. And of course, it would be hour-based. Depends what you need. And of course, we have quite flexible. I mean, we have ability to be flexible in regards of the installations. And in some countries, regulators require you to have processing on the local soil. So in that case, we do on-prem installation, and on-prem installation it's a bit more complex than SaaS, and normally takes 2-3 months. Depends on the infrastructure what you have. It might be cloud provider, it also might be the dedicated servers. We are flexible. We can do installation on any environment what you have, and it normally takes like in average 2-3 months. But SaaS 7 days.
Wow, that's wonderful. So what I'm hearing, really, it depends on the customer choice, what the timeline is going to be. So obviously quicker for SaaS, as you've highlighted, but also according to the laws of the land for any given client, a private cloud would be possible, or an on-premise development, or dedicated servers, or indeed you can work with their cloud provider of choice, which I think is what the market is looking for. Now, looking specifically at acquirers, what is the benefit of orchestration for acquirers more specifically?
Acquirers normally work on. I mean, they have processing. That processing helps them to be integrated to schemes. It's just, let's say, software which give them ability to do authorizations and calculate settlements, what they receive from schemes. But besides that, let's say to provide, if we talk merchants, to provide to merchants what they expect to have, including Apple Pay, Google Pay, convenient merchant portal, CMS, plugins, and many other aspects. Normally, acquirer do not do that, and the PSPs instead doing this part of the business for them. But in some cases, acquirers, because as I was saying, just in Europe, active acquirers, probably you can count, it could be like few dozens, like 50, 60 max. But number of acquiring licenses in Europe, it's more than 400. Does it mean that all those acquirers are not in need to provide acquiring services to their customers, current ones, for instance? No, it's not. They don't have expertise. They don't have people. They don't have technology. They don't have software. So let's say that if you talk about even large acquirer, so the larger acquirer need to have all-in-one as a top-up of the processing software, and of course the payment orchestrator could be very useful in that case. And we see more and more often tenders even from bigger banks in Europe, which are particularly looking for the payment orchestrator partner. And for smaller banks, it's even more obvious.
So I mean, some people may ask, so is orchestration just the middleware between a merchant and a PSP then?
Yes and no, because it's not a middleware. It's full. I mean, it's software could be used also for merchants as a portal with what was all their needs. So it's not kind of middleware. It's for banks which, for instance, use embedded finance. It could be considered as middleware because it helps them to get access to some specific options or to some specific functionality. For instance, to wallets, or to anti-fraud providers, or to KYC providers, or to other aspects. But in general, it's not a middleware. It's full functioning environment for the merchants to be able to do anything what they want, including also management of sub merchants, or settlements, or billing, or cascading, or routing, or many other aspects. So it's not. I wouldn't say that it's middleware.
Okay, so following on from that, then, at what point does orchestration stop being a technical advantage and become a real business asset?
Um, from point when I mean, for what? For banks, for acquirers, or for PSPs?
For all of those.
For PSPs, because I mean, let's say to obtain a, let's to become a PSP in Europe, you need to have a license, API or EMI. It takes from 6 up to 9 months to obtain the license. Uh, uh, to start as a PSP on European market, for instance, the very base of using that, let's say if you consider to do it in house, takes probably 2 years for you to develop this software and few millions of euro. It's already now. I mean, there is no question either to use payment orchestrator or to do it in house, because if you will be doing this in house, you will not be in time. So after 2 years, the payment orchestration will have double by those functions which you have in MVP. So it's not question either, from my understanding, for PSP and especially for newborn PSP, either to go with a payment orchestrator or to do it in this in house. So it's not just technical advantage. It's a core need. So without that, you will not be able to start. For acquire, it's a bit different. So they're still, because they are more old school. And their approaches are different. And so for majorities, let's say, of them, it's still not very standard, let's say, to use payment orchestrator. But as I said, I believe with the time it will be more and more examples when banks are using the payment orchestrator, because it's completely different technology, and it's the same vendor like the vendor of the processing software, because as now they are not doing the processing software by themselves, but rather buying it from the vendor. So it is the same would be with a payment orchestrator.
Well, wonderful. So we've got a follow-on question from the earlier question about middleware. So if it's not middleware, is it a service aggregator whilst adding services of its own?
Yes, I would say it's not completely service aggregator, but it's more service aggregator than the middleware, because it's as I said many times, it's connectivity box. So it gives you ability to create desired flow, which I mean required by your business, with embedded features, plenty of embedded features. But if it's not enough, to be integrated to third-party providers and to create it really the way how your business dictates how to do that. So it's like that.
And of course, the ability to have visibility of so much data across the ecosystem, I guess, and data is always valuable in payments in any walks of life, I think, Andrew.
Yes, and to analyze the data and to store the data secure way, and to, let's say, yeah, including sensitive data.
So we could talk so much more about all of this, but I'm afraid that's all we have time for today. So Andrew, I would like to thank you for walking us through what's really reshaping global payments nowadays, and for being very candid about both the opportunities and the complexity of this environment. So to everyone who's joined us today, payment orchestration is obviously not just about moving money faster or cheaper. It's about building infrastructure that is resilient, scalable, and adaptable as the payments landscape continues its rapid evolution. So, if you're a merchant, a fintech, a platform builder, navigating this very complex payments landscape, you're not alone. You're not alone. And intelligent orchestration platforms exist precisely because this complexity is too great to manage alone. So, for anyone interested in diving deeper into this, Akurateco will share some resources in the comments and links, and how to contact them, and indeed upcoming events. And we'd love to see you there. If you have follow-up questions, Andrew and I are there to continue the conversation. And thank you to everyone for tuning in. So until next time, keep asking the tough questions about the infrastructure that moves money. And over to you, Katrina. Thank you, Andrew, again for being a fantastic guest.
Thank you very much, everyone. Thank you, Neira, to be such a great host today. And it was always a big pleasure for me to talk with you and to talk with professionals. And thank you, everyone, to joining today. And I hope that I shed a bit more light on what is payment orchestration. And if you have any questions afterwards, so please feel free to reach us on our website and on the email indicated on the screen.
Yeah, thanks you all. Thanks, Neva and Andrew. It was a wonderful conversation. And yeah, also if you, as well said, if you have any questions, please do not hesitate to ask us. And also you can also follow us on LinkedIn. We publish a lot of relevant information regarding to what we discussed. So yeah, thanks again, and to the next time.
Thank you very much.
Bye-bye.
Thank you. Bye-bye.